Hello everyone. This is the pre-market report video for today, 21st February 2024 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Chinese Central reduced one of its primary interest rate by 25 basis points, but it considered and impacted negatively on the global market. Most of the news website and other explanation videos, whatever I saw, they all mentioned it's higher than expected rate cut since 2019. So it's not good and raised the China's demand concern, etc. under all. So yesterday for a good amount of time, I really tried to understand the fundamentals, what it is really kind of. Here I won't take much time, but I'll try to explain as simple and quick as possible. Basically in China, every month around 20th calendar day since 2019, their central bank will release the three types of interest rate. One, medium term lending facility rate, 1 year prime lending rate and 5 year prime lending rate. Here, medium term lending rate is the only interest rate at which Chinese central bank will give loan to the other banks. Whereas other two, either 1 year or 5 year prime loan rate, it's basis on the medium term lending loan rate, but at which the 18 major banks in China willing to lend it. So simply 1 year and 5 year prime loan rate, as the name implies, it's the rate at which banks willing to give loan to public and company. Now please look at these charts. Not the Chinese central bank that's cut the interest rate, rather this 18 banks willing to reduce their 5-year prime loan rate by 25 basis points despite Chinese central bank kept their interest rate as constant. This group of banks reducing the loan rate only happens either the central bank recommend to do it or there is less demand for loan. So on that basis, it's clear reducing only the 5-year loan rate and keeping the other two constant means it's a cause of demand concerns. Less number of people or company want to borrow the loan from the bank, which in turn affected the global Chinese business related stocks and also reduced the oil price by 1.5%. At the time of this video, WTI crude trading around $77 per barrel and Brent crude trading at $82.5 per barrel. Then coming to US market, we know tonight there is going to be two major factors release. One, Nvidia's earnings release and two, Fed's minutes of meeting release. Here, Nvidia's share price anticipating the better quarterly earnings from this January month 2024 onwards. Before last night, it increased near 50% despite its market cap valued more than $1 trillion in the end of December. So either way, some people or investors will be going to disappoint with the earnings, and it created the huge profit booking last night, which made the stock to crash more than 4%. In addition, this anticipation of Fed FOMC meeting minutes release created the overall market profit booking. However, Walmart's quarterly earnings beats the analyst forecast, which made the stock to increase over 3% and increased overall US retail sector itself. So Dow Jones alone kind of trimmed its loss. At the end, Dow Jones lost 0.17%, S&P 500 down by 0.6% and Nasdaq decreased by 0.92%. Even VIX increased by near 5% and moved near 15.5. US tech stock wise, most of them crashed. Tesla is the one that got hit most by over 3% as Germany's local government rejected the Tesla's plan for their manufacturing plant expansion, which will limit the Tesla's future growth in Europe. Then coming to Indian areas in US market, it's very much in line with the yesterday's Indian market. However, it was more positive and more negative. I mean, both ICICI Bank and HDFC Bank closed around 3% and 2% positive respectively. At the same time, both IT stocks Wipro and Infosys lost around 2%. It's signaling another bank positive trade today and IT negative trade today. Regarding GIFT Nifty, during US market trading time, it increased above 22,300, but at 3 AM Indian Standard Time, it trimmed some and closed at 22,265. So equating it to the spot market, for now, it's kind of indicating 20 to 40 points gap up opening. So this is what happened in the global market. Now let's move to the Indian market related info. First, some important takeaways from yesterday's market. One of the important reason for yesterday's Indian market positivity was due to the positivity in HDFC Bank. First of all, in the yesterday's video, I mentioned in the FITSE rebalancing, it's indicating a 3,500 crore rupees fund outflow. But some of the friends did highlight it in the comment section. apologize, it's not fund outflow, it's fund inflow. So from March 15th onwards, 3,500 crore rupees passive fund from FTSE Global Index expects to inflow into the HDFC Bank stock. Hence, apologize for the misinformation. Now coming to yesterday's HDFC Bank positivity, they had an analyst meet on Monday and that meeting ended after the Monday market close. During the meeting, HDFC Bank CEO explained that inheriting low loan to deposit ratio and the high cost of deposit from HDFC Limited after the merger is what causing the problem, and explained how in the next few quarters HDFC Bank is going to improve that and the profitability, etc. As a result, as per Bloomberg, out of 50 analysts tracking HDFC Bank, 45 of them having the buy rating and the remaining 5 has the hold recommendation with the average target price increase of 35% in the next 12-month period. Second, the present CEO in Federal Bank is going to complete 15 years of his tenure, and as per RBI rules, no one is allowed to be as a CEO for more than that period for the India-based bank. So KVS Manian was one of the main expected CEO of Federal Bank, but unfortunately yesterday he was appointed as joint MD in Kotak Mahindra Bank, which in turn increased the Kotak Bank share price by 2% and crashed the Federal Bank share price by 5%. Third, during the market time, yesterday Jefferies increased the Reliance Industries target price and also implies the potential upside for 30% because of O2C business, which is really good, and in normal days it was considered as positive. But yesterday oil price was crashing due to demand concern and there is an escalation in Red Sea which is preventing the Reliance diesel export to Europe. Both these reasons made the Jefferies price upgrade gone unnoticed. So any oil demand increase related news or Red Sea de-escalation news might support the Reliance Industries price. Moving on about institutions, FII net sold for 1,335 crore rupees, whereas DIA net bought for around 1,490 crore rupees. As a summary, US market closed on the negative note. In line with that, IT stocks indicating the negative trade. However, GIFT Nifty and Banks Indian ADR both indicating the positive trade. Then yesterday, as per stock open interest, Hero MotoCorp, Coromandel International, L&T Mindtree, AU Small Finance Bank, Petronet and Birlasoft got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, RBL Bank, Deepak Nitrite, Oberoi Realty, Manappuram Finance, NTPC and Tata Communications got an increase in open interest with a positive price close, indicating the long build-up. About the things to look out, there is nothing that I am aware of that are scheduled to release during our market time, but after our market close at 3:30 p.m, Europe's 10-year bond auction is due. Then for US, very important Fed meeting minutes, Nvidia's earnings, 20-year bond auction data and FOMC member press conference are the important items we need to keep an eye out today. Coming to technical, yesterday it was really a volatile session, but still Nifty crossed 22,200 for the first time and closed 0.3% higher. Thus on the daily chart, Nifty formed a 7th consecutive green candle with minor upper and slightly longer lower shadow. And also here this is the 5th continuous higher high and higher low formation. So yesterday, despite profit booking at a higher level, Nifty continued its upward momentum, had a consolidation breakout and managed to close near the day's high. Technical indicator wise, Bollinger Band began to expand and prices are trading along the upper band. All these indicating that the positive price action is likely to continue as long as Nifty trades above the psychological level 22,000 mark, which is the strong support. However, the hourly momentum indicator for the second day in a row has a negative crossover, which is a point of worry, and the immediate support is the previous resistance zone 22,100 to 22,150. On the upside, 22,460 to 22,500 is the immediate hurdle. In terms of Bank Nifty, it opened 90 points gap down but erased all the opening losses and moved above the 47,000 mark, signaling the strong buy mode. Thus, on the daily chart, it formed a long green candle with higher high and higher low formation for the 5th consecutive session. Hence, Bank Nifty has not only breached its 50 daily moving average hurdle but also convincingly cleared the resistance of 46,800, and now the next resistance is placed at 47,730. and the immediate support is at 46,700 based on fresh put writing, and as a short-term target, the more probable scenario is to reach 48,000 mark. Regarding the options front, the maximum call option open interest was at 23,000 strike, followed by 22,600 and 22,500 strike, with a meaningful new call option writing at 22,550 strike. Thus, from the options data, 22,500 is expected to be the next resistance. Whereas on the put side, the maximum open interest was at 22,000 strike, followed by 22,100 and 21,000, with new put option writing at 22,200 strike and then 22,100 and 22,000 strike. Hence, with immediate support at 22,100 and then 22,000 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any decision based on this, as I'm not a SEBI registered advisor. I am doing this for my and viewers' educational purpose only. Thanks for watching.